The United States and China have agreed to a temporary ceasefire in their ongoing trade war. This truce, announced on May 12, 2025, marks a significant development in the tense economic relations between the two global superpowers. For 90 days, both nations have agreed to hit the pause button on further escalation of tariffs and trade barriers. This pause offers a window of opportunity for negotiation and a potential return to a more stable trade relationship. This agreement comes after months of escalating tensions, with both sides imposing heavy tariffs on each other's goods. The trade war has created uncertainty in global markets and impacted businesses and consumers alike. The 90-day pause is a welcome reprieve, offering a chance for both sides to find common ground and work towards a more permanent solution. As part of the agreement, the United States has agreed to temporarily reduce tariffs on Chinese goods. The current rate of 145% will be lowered to 30%. This reduction is a significant concession and signals the United States' willingness to negotiate in good faith. In return, China has agreed to lower its tariffs on U.S. goods from 125% to 10%. This reciprocal action is crucial to ensure a more balanced trade relationship between the two countries. This temporary reduction in tariffs is designed to provide relief to businesses and consumers in both countries who have been bearing the brunt of the trade war. It is important to note, however, that this is not a permanent solution. The reduced tariff rates will only remain in effect for the duration of the 90-day pause. The future of these tariffs hinges on the outcome of the negotiations during this period. A key element of the agreement, as asserted by President Trump, is China's commitment to open up its markets to U.S. businesses. This has been a long-standing point of contention, with the U.S. accusing China of unfair trade practices that limit American companies' access to Chinese consumers. While details remain scarce, this potential opening of the Chinese market could be a game-changer for U.S. businesses across various sectors. However, it's crucial to approach this development with cautious optimism. The agreement between the two nations lacks concrete details on how China plans to implement these market openings. The lack of specifics raises concerns about whether China will follow through on its promises. Formalizing this aspect of the agreement will be a critical next step to ensure tangible progress and build trust between the two nations. The 90-day pause in the trade war is a positive step, but it is just the beginning of a long and complex process. The temporary nature of the tariff reductions means that the threat of a renewed trade war looms large. If a long-term deal is not reached within the 90-day period, President Trump has indicated that tariffs on Chinese goods could increase significantly. While he has stated they will not return to the previous high of 145%, any increase could reignite tensions. The outcome of the negotiations will have far-reaching implications for the global economy. A successful resolution could usher in an era of increased trade and cooperation between the world's two largest economies. This would be a positive development for businesses and consumers worldwide. However, failure to reach a deal could lead to a protracted trade war with potentially devastating consequences for global growth and stability. The world is watching closely as the clock ticks down to the deadline.